right. Welcome back to We Hate Money, episode 8. I am Arnie, and to my left,
I'm the Wiz.
how are you, mate? What's going on? What's happening?
Oh, you know, nothing has happened so far this week, so that's a good thing, right? Um,
Yes.
we get more news later this week, but we ended last week at some pretty good highs.
Yeah. Yeah, we did. For the S&P 500 and Nasdaq, we did. But the underlying, not so much. There was a Michael Gayed tweet that was, showing all the different ETFs from per sector and showing like emerging markets, showing Europe, etc. Nothing is at all-time highs, but S&P 500 and Nasdaq are pushing. So what does that tell you, Wiz?
It tells me that you better get in the Mag 7.
Sans Tesla, which is actually taking a beating. The Mag 6, maybe.
It's brutal for Tesla. Um, too much uh too much bad news, and I wouldn't even say bad, but not necessarily bullish, if that makes sense.
I feel like there's been no bad news apart from perhaps the Cybertruck being like having range issues. That's like
I
the
think
one.
conti
Yeah, go on.
I think continued price cuts are being interpreted as bad news.
Yeah, I've sort of explained my perspective on this to you before, and
Yeah.
many people that I just don't think that's um bad news. I think that every car maker does that in one way, shape, or form. It's just that the consumer doesn't see it happen the way it happens with Tesla. So the way it would happen with any other big auto manufacturer is that they would be adjusting the price behind the scenes between manufacturer and distributor. And they have these things called variable marketing budgets. And it just
hmm
means that um, even though they're just changing the margin between each of those three players. So the manufacturer, the distributor, and the consumer. And they'll be throwing in all sorts of incentives, you know what I mean? So if it's not necessarily a price cut, but you might go into a dealership and see the sticker price and be able to negotiate something down. And all of that extra discount is being paid for by the manufacturer. It's just that
Oh yeah.
it's negotiated between the consumer and the distributor or the dealership, if you will, at face value, and we just don't hear about it. So Tesla just does it out in the open, and it's a tough macro environment. They're a cyclical business, and any cyclical
hmm
business is going to be struggling to move product in this tough macro environment. So they cop a lot of heat for
Well,
it, which I think is unjust.
well, that's why I said it's not necessarily, it I don't see it as good or bad news. I just see it as news. And people are looking for something that isn't practical to have for 10 years, which is insane growth.
Well, see,
Eventually you're going to come across an environment where things level off for a bit, and that may have nothing to do with the company.
you get critics on both sides of the argument for Tesla, and
Yeah.
like one who you would consider a bull would be Gary Black. But Gary Black is always sort of clamoring on about how he hates when Tesla does price cuts and he wants them to spend a fraction of the cost of a price cut on PR and advertising, like it's some sort of magic bullet. Like, oh, they're losing, let's just say $1 billion per price cut. They could spend 100 million on advertising and PR and just move more product at the current price. And he's probably
Yeah.
right to some degree. But will it move the needle in terms of units moved as much as a price cut would? There's no way. So I I sort of see
I
what he's
think,
saying,
yeah.
and I think that they should probably invest a little bit of their money into that particular strategy. But I also think the most important thing for Tesla is keep manufacturing and keep that manufacturing growth up. Move the product as best you can. If that means you take a hit on the margin, then do so while you can afford to do so. Grow the energy business, grow the full self-driving, which is the real game changer if they pull it off, and then go for this moonshot, which is, a robot. Because
Yeah.
it's like, let me
Well,
ask you that question.
optics.
Let me ask you that
Yeah.
question, Wiz. Like, if
Yeah. Sure.
if theoretically full self-driving becomes adopted in, let's say, half of the Teslas that are on the road in the world, not just America, and let's say that people start buying this robot in the future in 10 years' time, I don't know what it'll be for. What do you think the market cap of Tesla could get to? It's currently sitting at around, I haven't looked for a while, but I think it's around 700, 800 million. Like, what do you think it could get to with full self-driving and a robot that is purchasable to do household chores?
Well, uh, putting both of those in, um, I think it'll depend on the economics when we get there. But assuming that we don't have any issues, I don't think it's going to be, 10 times its market capitalization right now. I could see it becoming holding these price levels and this valuation, if not growing, and that would just depend on the revenues that they have and how Optimus feeds into uh, its use case in the market. So it would be very bullish to me to if you had those expectations of those two things eventually happening. So I mean, I wouldn't say sell all of your Tesla today, but if you're where I disagree with Gary too, just to let you know. Um, I don't think the price cuts made new customers, if that makes sense. I think they brought customers forward. So maybe people were eyeing next year for buying, and then they said, you know what, these cuts, maybe we'll push that up. So I think the cuts will lure in people on the sidelines, people looking for a good deal because it was really expensive to buy cars last year. So I think Gary is wrong that awareness is how you become insanely bullish. I think awareness with a new product like FSD would be insanely bullish. So
Yeah, see, in terms of valuation, obviously predicting 10 years out with some of these fringe products like full self-driving, like a
I
cheap
could
model
say
that is a robo-taxi and Optimus. You saying you don't think it's a 10 times, I can appreciate that, and I think that's a realistic assumption to make that it won't be a 10 times from here. Let me just quickly
because
check the market cap. Well, yeah, go on.
yeah, I think it would just be a little bit reckless to say that, because I think the volatility at these levels dying down would be very good. So there's
So
a lot of support
so it's
for
currently
these
at
prices.
it's currently at a $663 billion market cap. It's one of the biggest companies in the world.
Hmm.
Saying it's not a 10 times from here, I think is prudent, but I also don't think it's out of the realm of possibility. If in 10 years' time they can execute on all three of those things we discussed, so Optimus robot, full
Hmm.
self-driving, and I just added in a cheaper model robo taxi.
Sure.
If they could get those three products off the ground in 10 years, I could see somewhere in the realm of possibility at 10 times from here. They could be a $6 trillion company. And I know that sounds crazy to think about now because the biggest company in the world is Microsoft at what, like 3 trillion? But if you go
It was
back
just
10,
it,
if
yeah, it
you
was
go back
just
10 years,
dethroned Apple.
yeah, exactly. But if you go back 10 years, like there were no trillion-dollar companies, and everyone would have said that Amazon, Apple, um, Facebook, Netflix, Microsoft, there's no way or no path forward. Like, how are they going to get there? They couldn't foresee things like cloud services or Azure or AI or the metaverse, which has been a flop. I'm not saying all those companies have hit the mark and done what was required to get to those $1 trillion valuations, but some of them have. And that will be the same thing. So Tesla might not make it, right? Of the Magnificent Seven, they're all working on innovating a way to grow. And just because of the nature of our system and inflation and things going up, we are going to crack bigger and bigger market caps. And in 10 years' time, there's no way to know. So, I
It's
would.
difficult. Yeah. Yeah. I mean, because
Am I a buyer of Tesla right now? No, but again, like the same as what happened a year and a half ago or 18 months ago when it got down to those sort of low $100 prices. I'm thinking about it. Like I might dip my toe back in. So I actually think it's almost a blessing that we've got this short term bad news cycle about Cybertruck, about price cuts, about Elon being off the rails, unhinged, and wanting his controlling stake. Because yeah, I just see it as a good opportunity to buy into a company that has enormous potential. That's how I view it still.
Yeah, I think the conditions are always important because we don't know what other competitors come out with in the next 10 years that could, give a run for anybody's money. And so I think though that being entrenched already in market share is critical. So I think Tesla has that. They just have to build their brand up more to be able to attract other buyers from other manufacturers of cars. I think there's a bit of brand loyalty struggle still there, as there always will be. Um, but it's not it's a challenge, but it's not impossible. So I'm kind of neutral here. I see Tesla at a crossroads of um, how they proceed. I think is going to be set by the tone of management, and they have to really, to me, outline goals that can reassure their investors, of course, that they're taking the long view to things and what those goals are going to look like. So I think that would be a good strategy going into the next couple of earnings calls is how they're addressing the long view
Yeah, I
and
think
dealing with short term.
I am interested to hear this earnings call, which is what is it, Wednesday after close? I haven't got the earnings chart in
Yeah,
front of me, but I'm
yeah,
interested to see how that goes. A final thought from me, and if you want to add a final thought, I just think that competitors to Tesla, well, not everyone, there are people who I think I would say are like cognizant of it and open to the possibility that Tesla is like, and I'm in this camp, is more than just an auto manufacturer. When people talk about competitors to Tesla, they are quite often only referring to other automotive manufacturers, and people throw out names like Rivian, BYD, Ford, GM, Stellantis, etc. I think again, in my eyes, the big differentiator between those companies and Tesla is how much vertical integration and how much work on the supply chain side Tesla has done in not just autos, but in the energy space, in um the battery and I guess the mining space, or how they source their materials. And then you've
yeah.
got these other aspects to Tesla as well, which is not fully appreciated. Like whereas those other companies, and like the data, for example, or Dojo, and the training data that goes into full self-driving. There's valid criticisms of lots of different parts of the Tesla business, but there isn't a company out there that's competing against Tesla in all of those verticals all at once. And the only way you could get a company to do something like that would be something like if you had like Intel and then Mobileye buying out Rivian to try and compete on that front, and then buying out some sort of energy company to try and compete on that front, and then buying out some kind of charging network company. Like, there's just so many different pies that they have their fingers in that there's no company like it at the moment,
No,
anyway.
yeah.
So,
Well, but not within the not within the automotive sphere.
yeah, not within the
And
automotive or the energy space. So it's sort of
yeah,
like those two things have such great synergy together that people often discount one or the other pieces of the puzzle. So anyway, it will be very interesting to see how we go on this earnings call. And I feel like people are
yeah.
pricing a lot of bad news for Tesla over the last 6 months. 6 months ago, this stock was at 269. Now it's at 208. It did get as low as 197 though, so it's gone up a bit and come back down. So yeah, I wonder.
It's a
I
lot,
wonder how we're going to go here.
it's a lot of volatility.
Yeah, the IV on the
Um,
option chain is crazy at the moment for Tesla, but it always is. So
well, yeah, that's because the people who are, you know, they don't want to commit to a long-term investment because they probably can't afford to do that. And so one way to do that is to swing options, and those volatility moves, they're always making somebody rich, but then making them poor the next day.
Through that, bro.
So yeah,
What?
well,
Oh,
but yeah, I agree with you. I think that we'll see what comes out of the earnings. I I struggle sometimes to. I try to look for the sentiment that people have in certain companies, and what I feel is that there's not too much negativity. I think something else is happening with the pullback you've seen since December, and I'm just not sure what it is. So I don't think people are bearish on the future of Tesla per se. I think there's some sort of factor that we just can't see underneath in investors' outlook. And whether that's personal, economic, and maybe they're going for safety, maybe they're just trying to deleverage a bit and take a position after earnings, which wouldn't be a bad idea. So,
yes, I agree. I agree with that. Anyway,
yeah.
we'll see how it plays out, bro. Another interesting
It'll
little
be,
thing I wanted to raise with you was a Discord user brought something to our attention by the name of LXL,
mm,
and this was facilitated by Robert. So yeah, thanks to him. But LXL was telling you and I and others that the ARM, which IPO'd last year, I forget exactly when,
yeah.
the lockup period on that is going to expire around March. So I got to look into the exact date, but it's one I've now got on my watch list. I'm keeping an eye on because, well, you know what typically happens after these lockup periods is the big institutional investors start dumping the shares to try and lock in some profit, and that volume is going to push the price down if if nothing else, but temporarily. Because I'm not saying ARM is a bad play. I don't know enough about it. It could be the best bloody buy, for the next 10 years, but it's just this short-term event where the lockup ends, investors lock in profit at the elevated level. Actually, what did ARM IPO at? Do you know what it IPO'd at? Let me have a look. I'll try and look it up.
Um, yeah, I'm trying to find out right now.
ARM
I mean,
Holdings, which is on the Nasdaq, currently trading at $77. The earliest I can see it opening, which was September 14, was at $63. But I believe that I think the actual IPO price was in the 50s. That was just when it first became like in
yeah,
market hours, if that makes sense. So it jumped up automatically.
it caught
Um,
a bid. Yeah.
yeah, so
It pulled back to the IPO and it's just been moving
it,
up since.
it got
So,
as low as 47.87, which I think is below what it IPO'd for.
yeah.
So yeah, I don't know. I don't know how much I expect it to pull back after the lockup period ends, but I guess it just depends on how much they cash out.
Yeah, it's been on an absolute tear for the past almost 6 months. So it's just really got some momentum back in November. And that was also when we got that big rally in the market as well. So
So
it,
the
it could,
official IPO price was $51 a share.
okay. I We'll see. I mean, I have to look more into it. But what is, yeah, okay.
What else has caught your eye at the moment? You looking at anything else in particular? What's your personal sentiment on the market?
Um, I think that it's I think that it's kind of a bit not, I guess, what would you call it? Immature for the market to rally so high before Q4 earnings and to lock in an all-time high. So I think we're going to find out as the fundamental news comes in from Q4. Was this rally in the big six pushing up the indices really worth it? Because the breadth's pretty bad. So maybe we'll see some rotation out of those winners into some of the laggards as we get through earnings, um, making breadth sort of get a lot better. And that might look like we're going into a market correction, but it could be a ramp higher going into the middle of the year. So there's a lot of fears about March, some big things happening financially there. Uh, something with, I think, the Fed's banking program and some other stuff. There's a bunch of, you know, stuff out there, and people are like, aha, March. Just like, aha, it was going to be this, every date, every few months, it's going to be this. That's going to bring the markets down 20%. So we'll see. But I think that's
Hmm.
potential here, as we could see we could see that rotation out of these winners up to earnings, because what is it? United had is up after hours, and their earnings wasn't that great. So there's some
What
kind
else
of
was after
fun
hours? Well, because Netflix was after hours, wasn't it today?
today. Let me check. Netflix is tomorrow,
Oh,
but we've
Netflix is
got
tomorrow.
Verizon in the morning. I don't think Logitech has reported yet. I think they report later.
Okay.
Um,
There's a few interesting
and
ones
then
this week. There's Netflix, there's ASML,
yeah,
AT&T, obviously Tesla, IBM, Sands,
Texas
Intel,
Instrument.
Visa. Oh yeah, Texas
Yeah,
Instruments. Yeah.
you got
Uh,
Halliburton tomorrow, which would be good for the energy side. See where that's going. You've got, of course, RTX and Lockheed Martin, so they should be doing pretty well. Um,
hmm.
who else you got here? You got Union Pacific. So a lot of good economic, a good variety of the economy is kind of reporting this week. You got a lot of financial still. Um,
There's a few interesting ones I wanted to chat with you about. Did you see what happened with Digital World Acquisition Corp, which is DWAC, the Trump SPAC?
is it delisted yet?
Bro, it pumped 88% this session.
Oh, it's because Trump's probably winning in all the states. Yeah, there you go. Whew, geez, went from God, I don't even know, like almost $10 since September. Now it's up 500%.
This is another one which I think like this is a SPAC still. When it combines with the Trump social media, I'll
Yeah,
be keeping an eye on this one for when the lockup period ends. Again, easy short, I think.
I think so too. I mean, DWAC, I think, almost touched 180 when it IPO'd. So, or, when it came out. It's like 3 weeks in, it was boom. So
And one other
we'll
one which
see.
got brought, sorry, go on.
Oh no, that was it. Yeah.
I was going to say one other one that got brought to my attention was Stanley Black and Decker, which is SWK. I don't know what this means, but Archer brought to our attention that there's been an unusual high put volume, 711% above the 30-day average put volume. What do you make of that?
Um, that sounds so. I would imagine it depends on the strikes to me. So if they're in the money puts, that would be very important, because it means somebody definitely sees downside, and that would create downside pressure on that stock. Now, if they're out of the money puts, maybe you've got someone speculating downside, but it could also be someone selling puts. So maybe they're very bullish.
Yeah, I can't see the
'Cause
strike and I can't see the expiration. So I don't know what's going on with it, but one to watch. I think their earnings is a little way out.
yeah, it's a bit unusual to have a large amount of put options played. Somebody knows something. Um,
Feb
but I would
1st.
say,
Feb 1st is their earnings whiz. I'll be keeping an eye on it for sure. Don't know if I'll play it.
yeah, I would say check out the options chain after the close, because you should be able to see where the most interest is in the strikes, and that should give you a good idea of what that person's probably looking at.
Nice one,
So
brother.
yeah, closer to the money, the more most likely the more bearish it is. So sometimes people will do out of the money expecting a drop. You should be able to check that out. And I mean, that's a lot of volume.
a big jump as well. So I do wonder. Someone knows something, as always is the
Maybe they're
case in the
going
market.
bankrupt.
Oh yeah, maybe. Maybe it's worth a few lottos. Not financial advice, general in nature.
No, no. And if someone says lotto, it means there's a good chance you're just going to lose all your money. So just to clarify that.
Yeah, it's
Um,
pretty standard. Well,
but
let's
yeah, I think that we could see some good winners this week. I don't know about Netflix. They've recovered quite well from their 2022 pullback. So
have you been following
we
that one? Like I haven't listened to an earnings call for Netflix in a while. I know that they
uh
were recovering in terms of growth.
yeah, so they've been getting more subscribers. They're if I remember right, they're weeding out the I guess what do you call them?
Account
They've been
sharings or whatever.
yeah, they've been getting um that under control. Looks like their advertisements bringing in some revenue. So but they got a lot more subscribers, I think, last quarter, and that's very bullish for them. But also, the dollar had pulled back considerably going into that earnings. So it's always very bullish for Netflix. At least it's a natural magnet up for the price because of all the international business they do. So as the
Yeah,
dollar
they do
gets
a lot.
weaker, yes. So as the dollar gets weaker, that tends to help them out a bit. So I would say that's probably if you see the dollar going up, whether it's at earnings or after, doesn't really matter. You should expect Netflix not to overperform, but it's starting to get back into its consolidation range from 2021 and 2020. So I don't know if it's going to hit resistance here and sort of maybe pull back for this earnings, or maybe it's enough to juice it back up closer to its relative highs. So we're gonna find
It
out.
feels like it hasn't moved meaningfully from last earnings. Maybe I'm wrong. Maybe it's come down slightly. I don't
I
know.
think last, yeah, I think last earnings, I thought it got a little bit of a bump, but it's kind of in the same neighborhood. It's kind of been in the 400s since the summer. So it's locked in between 400 and $500 a share. And now it's testing, you know, closer to 500.
Sorry,
So
I
it's,
didn't mean Netflix share price. I meant the Dixie. Like looking at the
oh,
Dixie,
yeah, sorry.
it looks around exactly the same. So between last earnings, which would have been what, October-ish?
Yeah,
Yeah. And then actually it has come down. Around October last year, I mean, they would have been
yeah,
pulling in over that whole quarter though. It went from about 99 to 106, and now the Dixie's currently at 103. Probably been in between 106 and 103. So we'll see how it goes.
yeah, I mean, we're kind of, we've had a sort of like a double top ish in the dollar over the past 2 years. So whether that's going to hold going into the future, or maybe we just say, you know what, technical analysis is bullshit.
It's not. It's technical analysis is wonderful for looking at trend, but
Yeah,
predicting anything in the future off of it, I get shitty.
yeah, exactly.
But I
I
love
think
it for trends for sure.
yeah, I think there's something that we're running into near those highs for the dollar that is fundamental to the economy. So there's some sort of anxiety about the dollar getting that high, and whether people see it as a good opportunity maybe to use that higher dollar to maybe, get some other currencies going on or to buy up some commodities. I guess we'll find out, but people just couldn't resist it. Um,
Yeah,
but we got the whole inflation fight too, and everyone thinks the Fed's easing. So I mean, the last pullback I would say is probably because people are expecting um, easier monetary conditions this year.
I really
So we might,
feel. Sorry to
yeah,
cut you off, man, but I really feel like if that doesn't occur, commercial real estate's going to blow up and take everyone with them. I still feel like we're in the woods. I feel like we're not out of the woods in regards to a big crash. That's my own personal gut feel.
Oh, oh yeah. I think that this rally in the top, 10 stocks being 30% of the weighting or whatever of the S&P, it's just ridiculous. And it's like you're dragging these things up. You're creating an accident by overcrowding these trades. So you have this obvious trend to run to quality, or at least perceived quality, right? And Microsoft is, I'm not saying it's not quality, because it is, but is Nvidia quality?
I
I
mean,
mean, probably not.
not to the same level as Microsoft.
No, right. So I mean, at, what is Nvidia, over $1 trillion market cap now or something? Trillion and a half.
Bro, I haven't been
It,
looking at it. It's just a
it's
yeah.
it's it's out of this world. But I mean, to me, that shows me that we're in the late stage of a bubble. And whether or not we reinflate by continuing to try to put pressure up into these quality names or not, we're going to find out. But commercial real estate to me is done. There's nothing they can do to save it, because,
Rate cuts would save it, but it just depends on whether or not
well,
it just depends on whether the administration and the Fed have the foresight to do that.
I
Or
don't. I
and
think
should
it's,
they do it? Like,
yeah.
should they bail them out? I don't know.
Well, bailing them out and cutting rates are two different things to me, because,
In my mind, they're interlinked. I know they're different
well,
things, but I'm just
yeah,
saying, like, it's a form of a bailout. Like, if you want to ease the
I know.
pressure on that particular sector, rate cuts will do it the same way that pumping money in will do it.
Well, I know that the Fed wouldn't cut rates just to save commercial real estate. That would piss off a lot of people, because
When you say
if that,
when you say just to
yeah,
save commercial real estate, though, like it's not just to save commercial real estate because of the contagion effect. Like every commercial real estate owner that owes debt to a bank, every small business that depends on foot traffic of commercial tenants, like
well, as long as they can still pay their mortgage, as long as they can still pay those loans, then it doesn't matter how worthless the real estate gets. I mean, it does suck that they're underwater. So if they're going bunk because they can't pay those, then there's something else happening. So it's not just the devaluation of those properties. So they're kind of interlinked with a larger economic issue, right?
that's right. But
So
how
if
do you
we're,
fix it? Like
yeah,
what's the fix? If you're the government or if you're the Fed and you see this on the horizon,
we'll stop lying about the data, right? No.
yeah, yes. But in practical terms,
Yeah.
Wiz, you're given the keys tomorrow. What do you do?
I raise rates another 100 basis points and just get it over with. And then I'd cut and just say, okay, inflation is actually dead. We don't have to titty and squirm about for the next 6 to 8 months
So you want to just
about what.
coup de grace the commercial real estate guys?
Well, I don't want a coup de grace per se. I will cut rates, right? But I want to make sure that the needless speculation, and when I say that, I should say this. I should say the fraud that's happening is over. So, because there's people out there committing all sorts of fraud, and you can see it now starting to get into social media, where people are telling other people how to do shell games with corporate payments and loans to get higher access to credit, and they
The
don't
problem I have,
have that. Yeah. So I
the,
mean,
pro-
to me, I see the fraud out there is still alive and well, and that only comes down if we have a severe amount of, if we have a credit event.
the problem I have with what you just said
Yeah.
is, whilst I agree with everything you said about
Yeah.
rooting out the bad actors and the way
Yeah.
that you're talking about going about it would certainly work, it would cause enormous economic and real pain across the world, like not just America. Like it would
Only
be
if you
like what you're discussing.
wait.
Like if
Yeah.
if hypothetically the Fed raised rates and let some really big commercial real estate actors fall, which in turn contagions to a bank, and then the Fed tries to step in, it's going to either cause the damage and then cause more damage from the money printing that will have to occur to bail it out, the quantitative easing, which will have to occur.
Well, we have to remember that there's already programs the Fed has outside of easing, right, and QE that they can use to help beleaguered institutions. And they're looking to expand some of those programs to smaller banks. I don't know if you heard that.
I've heard bits and pieces about this, and like you and I have talked
Well,
about it
it was like a
before.
new thing. It's a new thing they just came out with last week
Oh, really? Well,
after.
maybe I haven't looked up or caught up with
Yeah,
this.
it
So
was
I'm
kind of like,
interested. But I'm just like the scenario you're
yeah.
painting with, it just seems like another 2008 or worse.
Well, I mean, it's not the Fed's fault that we've gotten to this point, right? I mean, sure, it kind of is. The lead up to it is definitely problematic, but inflation is a human problem. It's some we participate in the economy, we buy in the economy, we borrow more money than we could afford to pay back, and we do this at the personal level and at the business level and at the government level. So
Yeah, I
the
think
question, yeah,
this is a
the
very big
question you have is like,
conversation.
what is, yeah, I mean, well, to me, there is no like right way to fix it. I feel like somebody has to eat, you know, some dirt on it, but
We're
that
gonna
doesn't
have
mean
to
you
give
can't
our
help them out.
let's give our
Yeah, we
final
have to
thoughts on
pause.
it, and we can discuss this whole
Yeah,
topic next week because it's a big one. But like my final
yeah.
thought on what you're saying is like there's no way to fix it. I disagree. I think that if you kept rates elevated for long enough at the appropriate level, you would eventually drain the liquidity from the system. So it's the slow way or the fast way.
Well,
That's how I feel about it. What are your
I
final thoughts before we wrap up?
I think there's a way to fix things. I just don't think there's a way to fix things for everybody. Somebody somewhere is going to get burned, and whether that's the taxpayer or a portion of the market economy, I mean, we'll find out. But I think that because of the nature of the world itself, it's difficult to hold rates for very long. So, but yeah, d- definitely next week it'll be interesting to explore.
I love that. I love. We covered a lot this pod, man. We covered what did we cover? We covered Tesla, DWAC, SWK, Netflix, and then our thoughts on the general vibe of the economy.
Netflix is my favorite stock to talk about
Oh,
because
really?
it's the first stock I actually timed the top on like perfectly. It's the only one I've ever really done.
Yeah, you crushed that trade. I remember it. All right, let's sign off, brother. I'll
All
talk
right.
to you next week. Cheers, Wiz.
Yeah, you too, man. Take care.
See you later, all. Bye.